doesn't care about you. That's why you need a medical emergency kit. It contains life-saving medications like ivermectin, Z-Pak, and antibiotics. Stock them before they block them.
This is a special report.
Knowing how to invest your money is harder than ever before. Dealing with stock market volatility, record debt, and terrorist attacks requires new thinking. At U.S. Asset Management, we can help you see the world more clearly so that you can move beyond the chaos and invest with confidence. Call us, visit us online, or drop by our office. U.S. Asset Management, helping you make better decisions with your money.
We're back on the Skiff. Thanks for joining us. Thanks for our audience and all our distribution channels. We really appreciate you. Check us out on podcast. If you're, driving to work or whatever, you can turn it up twice as fast and listen to us quickly and get through the news, get through the mission brief. But markets are extremely volatile, and I called Tom Teague last night. I wanted to bring him on. Tom, thanks for coming on, my friend, because you're
Absolutely.
my go-to guy. There's a lot to talk about. First, let's start with Boeing. China axed, Boeing imports, but I don't think that's that big a deal because they essentially weren't buying much from Boeing anyway. Do you agree?
That's correct.
Yeah,
that's correct. It was a small amount before. And I think, listening to a lot of the chatter from various people, I think Boeing's going to be in a good position to get with all these other countries that are currently buying Airbus. I think Boeing's going to be in a really good position to get business as a means of like easing some of these tariffs and just, general trade negotiations with the rest of the world. So, and that's like an easy win. And Boeing is seen as sort of an industrial champion that's been completely sullied by, a lot of scandals and press and stuff like that. So I think Boeing should do well. I know the China stuff's bearing on it a bit, but I don't think in the end of the day, it's a big deal.
Well, I saw we put out an article this morning that Russia is trying to use their frozen assets as part of the negotiations to buy Boeing jets. So, I was in Moscow, over a decade ago, and Boeing jets were everywhere, and there were multiple Russian airlines, but they all got consolidated just because the business wasn't there. But if the sanctions come off, that's going to be a big market for Boeing, I think.
Yeah, you don't want to fly in a Tupolev. not really that great of safety records. It's like five engines on the back. They look like Ultraman things.
Yeah, they're always kind of ugly. The lines are not as clean, man.
No bueno.
What about markets in general? Where are you on what do you think is happening? You got rates, you got tariffs, you got a lot of swirling currents.
So now they're looking at 245% tariffs on China. I was listening to your last guest just when I was waiting. And I think he's spot on a lot of stuff. I had a conversation with someone this morning. You look at Amazon, you look at Walmart. Walmart's like 40% of their revenues are roughly merchandise, and like a very large number of that, maybe 70% come from China. But what's really happening? Obviously these guys are going to get hurt, but they've got access to capital. If you look at the smaller players, like in North Carolina, you've got a lot of people that have used this supply chain
and energy data,
and they sort of finish everything here. But it comes from China, maybe goes through Mexico and comes up here. These people are, they're not spending a ton of money on advertising. It's kind of a straight through business. They're making their, money the way they have for years. And the problem now is with these China tariffs, stuff's getting turned away. It doesn't come to Mexico. In Mexico, you have labor laws. You can't immediately fire workers. You have to get them, like, in many cases, like 6 months unemployment. So they're just sitting there idle right now. The real problem for the smaller businesses is a working capital problem. Yeah. And what I'm hearing from various people is that payments from people who are buying their products are not coming in. So I think this is, I kind of heard your conversation with Stephen in the last one, in the last segment. And I think that the problem is for the smaller guys, you're going to get working capital squeezes. They don't have as much access to capital, and that could have a really big knock-on effect. So I think what Trump was trying to do is to kill two birds with one stone. You know, obviously he's trying to thwart China's like hegemony, which is, we don't really want to be most reliant on someone who's developing an army just to beat us.
Yeah.
And I understand all that, but I think that their view and China's view is just like with COVID and gumming up the supply chain at the end of COVID and causing inflation in this country. Their willingness to go through hard times is exceptionally higher than ours will be.
Yeah, we need to get there. I mean, we need to be willing to go through some hard times. I mean,
we could
not just
however,
the middle class.
The Fed
but,
is not playing game. We're working against each other, and that's that's my big frustration right now. For the Fed to come out and say they're not going to do anything, it's very different than saying that we're on the watch. It doesn't mean they have to act, but it encourages bad behavior in markets. When the Fed says they're not going to do anything, it means that people can be, short and push on the bond market. And that swing, since I was on your show last time, it's pretty unbelievable.
We went from 3.8 to 4.5 plus.
Yes.
Right?
Yes.
Yeah,
and we've recovered a little bit, but it's scary. And the way that markets look right now, it looks like the, American dominance is ending. That's what prices are telling you, right? Bond markets are weak. Obviously the announcement that he was going to postpone some of the tariffs on the China stuff and take them off on the other countries, we had a big rally. But I think that the way that markets are behaving right now, and gold in particular, it's suggesting that, American hegemony is on the decline. And there's a lot of things the Treasury can do. The Treasury, Bessent talked about going out and buying some of the off the run bonds. I mean, we have a meaningful amount of treasuries that were issued during COVID when rates were a lot lower in the 10-year, 20-year, 30-year bucket off the runs that are trading. Some of them are trading at 50 cents on the dollar. You could buy those back and then finance it with new debt and roughly pay almost the same interest payments on half the amount that you had outstanding. So there's things they can do. But, I think the problem is that we have sort of a lot of Europe and a lot of and China sort of aligning together to say we're not going to do anything in the short term, and that's kind of scary.
Well, it's Trump. I think I was Bessent or somebody, maybe it was Commerce guy Lutnick, said that the reason they gave the 90-day pause was definitely the bond market had a lot to do with it. So you mentioned being scared. I think somebody got scared in the room, right? I mean,
absolutely. That reversal was massive. And it's there. Bessent said it wasn't foreign selling. We don't really know. I've heard that it was, Japanese hedge fund, big one that had a bunch of these basis trades on with swaps that were unwinding, but that scared the hell out of everybody. And that's, we've got we're not in a particularly strong position right now to wage a tariff war, an economic war, and in particular, if we've got the Fed working against us, and I feel like that's what they're doing.
Well, that's an important point that people need to understand. The audience may not get this, is that the Fed is not lowering short-term rates, right?
So no, and they're not acting like they're going to either. And that's, you can make, when Biden was spending money like a drunken sailor and all this stuff was going through Congress after we were coming out of COVID and we didn't need that kind of money coming into the economy, the Fed said nothing.
Yeah,
they said they were gonna keep rates the way they were, and that this was all going to be, very short-term oriented, and like the inflation, and then they changed their mind. Now they're going off on a limb and they're predicting what's going to happen, years out with tariffs and inflation. And I actually think there's an interesting thing. Like if you look at some of these apparel makers like Nike, they spend like $4.5 billion a year in advertisement. Well, if you adjust the price of goods, the cost of goods sold based on what the tariffs look like for where they get everything manufactured, that's where the hit's really going to be.
Yeah.
There's going to be a lot less advertising spending, and so they're not going to just pass the cost along to the consumer, because there's a price for where shoes clear. and some guys make their stuff in Indonesia, some guys make their stuff in Vietnam, people will move away from China. But, the bottom line is they're not going to be able to just raise the cost by the same amount that they're getting charged on the side with China, because there's a competitive market for this stuff. So I don't think that it's going to be as inflationary, but I also don't think it's the Fed's remit to sit there and worry about something until the data suggests that that's going to happen.
It's a political Fed. I mean, they
It
can
absolutely is.
find a reason, whatever excuse they want to use. I mean, they just don't want to lower rates for Trump. I mean, that's
exactly my feeling as well.
Tom, I'm going to take a break. Can you come back for another segment?
Sure.
All right, be right back. Welcome back to the Skiff. We're doing a big push here. During the Biden administration, we dropped off a lot of coverage of the markets because all the data was fake. But I didn't understand how to trade the markets during Biden. But we're coming back into that sector hard at CDM, Business and Markets. Tom's one of our best commentators. So I wanted to ask you about NVIDIA. I mean, how is this impacting? How does this factor in with the cutting off chips to China?
So NVIDIA made an H20 chip that was in 2022. The Biden administration put heavy restrictions on what NVIDIA could sell to China. So it's basically a version that was created of that chip that they could specifically export to China that met that criteria. I don't agree necessarily with either administration in doing this, because if you can buy these things in other countries, they'll manage to get a hold of them. But the Trump administration says there's going to be a licensing requirement for them to sell the H20s. So NVIDIA has come out and said that they're going to take a $5.5 billion write-off against that. That's like roughly, on estimates, 4%. So it's not a huge amount of their revenues. And I don't think it's going to be that impactful. I'm more concerned about, what the other big tech companies in the US are going to do in terms of their AI spending. So I don't think that, I don't think this is really going to be a game changer in any way, shape, or form for NVIDIA, this restriction. And I think everyone's ratcheting everything up, like China's stopping the sell of rare earth metals. This is something we can do to harm them. And Trump
had to have thought about the rare earth thing, right? I mean, that had to be planned out. I mean, you would think that they would be ready for that.
I hope so. I don't know. I mean, I think a lot of this stuff is on the fly. I mean, I think Trump, his view of the trade situation, I heard him speak one time in New York, and he was talking about a Brussels guy. He called him up. The guy really didn't want to listen to him. He said, you need to take the tariffs off American cars. The guy said, we can't do that. And Trump made this statement, well, how about I put a 35% tariff on your effing cars? Said the guy showed up the next day to the White House, and Trump wanted to know what kind of plane he had to get there that quickly. And I think his view of the world was, if he comes out with this shock and awe, everyone's going to come to the table quickly. And I think for the most part, countries did come to the table quickly, because there's a lot of opportunity out there for places like Vietnam and Indonesia, who are not really that pro-China, who have a lot to gain from this. But I think I think a lot of this was done on the basis that they thought they would get a quick response from China. And I think that China's probably thought this one out and said, the best thing we can do is just sit here and let the situation deteriorate. And for me, there's two things that have altered my view of why that won't work. One is, like I described in the last bit, about how, smaller companies are really relying on the Chinese supply chain. So it's really going to hurt the economy here profoundly. That's one thing. And the other thing is that there's definitely, like I said, like a unifying force of everyone kind of standing up to Trump, and he's attacking everybody once. Like the Greenland thing certainly doesn't help Europe. His obstinance to increase, military force and threats against Russia is not helping him. So he's trying to do a lot of things at one time. And I think the strategy to contain that is for everyone to just let it play out and hurt the U.S. as much as possible. So I'm convinced he'll have to change his view of tariffs, and he'll do it on a longer term. And I think it's interesting because this tariff that he's announced, it gives China a very quick off ramp. China can come to the table tomorrow and these tariffs can be removed. And then we kick the can down the road for the next thing with China. I think the next step for Trump is to say, you got 2 years. I'm going to ratchet these tariffs up every 6 months. And that's really going to make a huge difference and move the needle in terms of the manufacturing we do in China. And that's
he's obviously willing to do that. I mean, he's obviously when the pain gets hard enough, he corrects. I mean, that's one strength.
Exactly. And that's a good thing.
Yeah. So there was 2 announcements out of China. One, that they want to come to the table this morning.
Yes.
And 2, that they are going to, in opposition to this, to, as you said, band together with our allies in Europe and elsewhere and try to pressure Trump to do that. I think that's why I think there's a big push to do some stuff with Russia. I expect that.
I agree. I think we're kind of aligning into these axes. And I think, I mean, as much as it sounds bizarro, I think that in our long-term goals are much more closely aligned with Russia and becoming much less closely aligned with Europe.
Yeah, I agree.
Europe is very much there. Well, Europe is going down this economic death spiral where they're basically outsourcing everything to China. They admire China's model. They admire the social credit system. They admire the government strength and ability to centrally plan economies. They all have this like sort of like communist streak in them. A lot of the popular, or not populist, but a lot of the WEF people and European Union people, they love that power. And I think that they're aligning with China, and it's really quite disturbing.
Yeah. So yesterday I applied to take a team to the St. Petersburg International Economic Forum in June. I think that's going to be a big, big event. And, it's something that we want to cover here because I think the doors are going to blow wide open. I was on Russian TV early this week because I just wanted to say to the people, look, we don't want a war. We want this to end. I mean, I wasn't pro-Russia or pro-Ukraine. I just said, this needs to end. And the comment I got afterwards that we don't want this Chinese stuff. It's crap. It falls apart. We want American products back in our stores. So I found that interesting, kind of anecdotal, but I did find that interesting.
Yeah. Well, I mean, look, China started COVID at a very coincidental time when we were tightening the screws on trade issues with them and had come to agreements. That stopped all that. They didn't implement anything. The Biden administration didn't make them do anything. China is influencing our universities. China is fomenting racial discord in this country. They have a lot to answer for. They're building a military just to take on the U.S., not to just defend China, but specifically to take on the U.S.
Yeah.
I think that, and I'm sort of seeing this as well. Like even people on the left are starting to at least acknowledge that. They hate Trump still more than anything, but people are acknowledging that China is not our friend and they don't behave like our friend. And so, and I look at what they've done to Europe. We're on the way for that happening. The more we convert to EVs, the more we convert to alternative forms of energy away from our own strengths, we're playing into their hands and they're just becoming the company store.
Well, we have to prevent, I mean, Trump's made a lot of progress to disrupt all that, but I feel this like reverse tide coming in, trying to stop everything he's doing and push it back towards, what they were doing before. Last question. What do you think about gold as a store value right now? I mean, it's hard to trade it, but what do you think?
Not if you own it. It's certainly it's my biggest holding. And I've had it for years and it's starting to work. I think that you've had an enormous amount of central bank buying of gold. I think with this like sudden, feeling that the U.S. may not be the world's strongest nation, or that we have cracks that we have to repair, I think it's looking like a better asset to own. And, if you look at bunds, I think bunds are like 20 basis points of real yield. I mean, it's pretty terrible. So it's not just, the movements in gold are certainly suggesting to me that there's fear that the system overall is changing.
Yeah.
And this is the time period when you'd want to own it.
Yeah. Interesting. Thank you, Tom. We'll have you
You're
back.
welcome.
Really appreciate your insight, my friend. Thanks for
You got it.
carving out a busy trading day.
Have a good day.